Welcome. In this video, ZBCN coin is bullish from here. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we look at price movements in general, trend lines, commonly used in technical analysis, offer highly valuable insights for investors. Especially when an asset's price consistently makes higher lows and higher highs over a certain period, this is referred to as an uptrend. In an uptrend structure, the support line drawn becomes critically important for investors. As long as the price respects this upward trajectory, it is seen as a strong signal that the bullish momentum is intact. When we closely examine the current price chart, a fairly stable uptrend has formed over a specific time frame. Within this uptrend, the price consistently touches the trend line and continues its upward movement after each contact. This behavior is referred to as respecting the trend in technical analysis, leading investors to take positions based on how the price reacts to this line. The current uptrend line serves as a significant support level, both psychologically and technically. For investors, maintaining this trend line is crucial. Every time the price tests this line, buyers step in and push the price back up. This shows the buying pressure is still strong in the market. However, if the price breaks below this trend line, it could signal a weakening of the trend, or the start of a potential correction or trend reversal. Therefore, monitoring whether or not this line holds is extremely important for investors. The price's reaction to this trend line is not only based on past behavior, but also plays a predictive role for future price movements. Thus, every time the price nears this uptrend line, investors face a sort of critical decision point. If the price touches the line and then resumes its upward movement with strong buying pressure, this is interpreted as a positive signal for both short-term and long-term investors. Trendline adjacent zones are considered low-risk buying areas, as continued trend movement can cause sharp upward price action. On the other hand, if the uptrend line is broken, investors often place their stop-loss levels just below it. A break below this level suggests the trend structure has been invalidated and a new technical setup must be considered. In the current situation, the price continues to respect this line, with upward movement following each touch. This indicates the trend remains strong and buyers are still actively participating in the market. Uptrend lines also have a significant psychological impact on investors. These lines provide both direction and confidence. Especially during uncertain market conditions, such trend lines offer investors a technical anchor. With these lines, investors can maintain clarity and avoid getting lost in volatile price movements. Therefore, the current uptrend line not only tracks price action, but also guides investor behavior. Upon analyzing the chart, it's clear that the price is highly sensitive to this uptrend line and reacts strongly with upward movements every time it approaches it. This pattern is recognized and acted upon by both algorithmic trading systems and manual traders. As a result, this trend line has evolved beyond just being a line in technical analysis and has become a key part of many trading strategies. For this reason, preserving this trend is vital for the continuation of the uptrend. Especially when such trends remain intact over the long term, it reinforces hopes that the price will steadily reach higher levels. This maintains confidence for both retail and institutional investors. If the price continues upward without breaking this trend line, it becomes possible to reach and even surpass the next resistance levels. Additionally, increasing volume each time the trend line is touched supports this view, as higher volume indicates a strong base of buyers behind the move. On the other hand, it's also important to consider what happens if the price breaks this uptrend. Technical analysis must account for all scenarios. If the price breaks below the trend line with significant volume, it may indicate the end of the trend. However, the price action following such a break should be monitored closely. Sometimes, after a break, the price may climb back above the trend line. In such cases, the break is considered a false breakout. Investors who panic and sell in these moments may incur losses, while the trend may resume and the price continues its upward movement. The price continuing along this uptrend also signals a trend continuation pattern to investors. This allows for the setting of longer-term targets and makes positions more secure. If the trend is preserved and the price continues to respect this line, higher price levels could be tested in the medium to long term. This trend line thus becomes a critical reference point for investors looking to maintain or enter new positions. In conclusion, preserving this uptrend line is of great importance both technically and psychologically. As long as the price does not break below this line, continued upward movement can be expected. For investors, unless there is a sustained close below the trend line, the assumption remains valid that the trend is intact and that the price can reach higher levels. Therefore, every price move approaching this trend line should be closely monitored, and strategy should be built around this level. In this way, the concept of trend in technical analysis becomes not just a tool for analyzing the past, but also a projection for the future. But we can't rely solely on trend lines for our analysis. Let's look at other metrics as well. Stay tuned. I'm interrupting the video for a moment, friends, because BitTunic's exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description. The ascending triangle pattern is a strong and bullish chart formation in technical analysis that often indicates a continuation of an uptrend. This pattern reflects growing buyer confidence and weakening seller resistance. Specifically, when the price breaks through the top horizontal resistance line of the triangle, it signals the potential for the price to reach new and higher levels. In the current scenario, the price appears to have broken above this resistance level and subsequently experienced a pullback. This pullback is typically referred to as a retest and represents a critical opportunity for investors to consider entering a position. The retest process occurs to determine whether the previous resistance level has now turned into support. At this stage, the price returns to the horizontal line that previously acted as strong resistance and tends to bounce upward from this level. If the price holds and resumes its upward move, it confirms that the breakout was not false and that a strong bullish trend may be beginning. In this scenario, investors and technical analysts begin calculating the target levels of the ascending triangle. These targets are usually based on the height of the triangle added to the breakout point, offering encouraging signals for potential gains. A breakout to the upside from this formation indicates that buying pressure outweighs selling pressure and that bulls have taken control of the market. Such a breakout is considered much more reliable when accompanied by an increase in volume. If a noticeable rise in volume was observed during the breakout, it confirms that buyers entered the market with strength and a move toward new highs has likely begun. However, it is crucial during the retest that the price does not fall back into the triangle. If it fails to hold this level and moves downward, it could suggest a false breakout, signaling a need for caution. In the current chart, the price is broken through the upper horizontal line and returned to test this level. This is a typical and frequently observed behavior in technical analysis. Investors often look to take positions in such retest zones to benefit from potential upward movements. If the retest is successful, meaning the price moves back upward from this level, the ascending triangle's targets come into play. Target calculations are made by measuring the distance between the bottom and top lines of the triangle and adding this to the breakout point. The resulting levels serve as important reference points for investors. On the other hand, it's important to remember that no chart pattern in technical analysis offers a 100% success guarantee. Therefore, when taking positions based on such formations, investors must implement risk management strategies and define stop-loss levels. If there is a close below the retest level, positions should be reassessed and possibly exited early to minimize losses. Markets do not always move as expected, and unexpected developments can quickly alter the technical outlook. For this reason, both technical indicators and market sentiment should be carefully monitored. Currently, the price breaking above the upper resistance line and attempting to hold that level suggests that buyers still have control. If the retest is successful, it could spark a new upward movement in the market. In this context, technical analysts see significant bullish potential. Moreover, this kind of formation reflects market psychology. The ascending triangle pattern shows that investors are willing to buy at increasingly higher prices, creating a sense of confidence in the market. Sellers, on the other hand, appear less aggressive at each resistance level, leading to an eventual breakout. At this stage, investors should act cautiously and consciously, remaining alert to sudden price movements. After a breakout and retest, changes in volume, signals from other technical indicators, overall market conditions, and news flow should all be considered when forming a strategy. Especially during the journey toward the pattern's target level, price reactions to interim resistance and support zones must be closely monitored. Each new higher high and higher low indicates a healthy continuation of the uptrend, while sudden drops or returns inside the pattern should be carefully analyzed. In conclusion, the price breaking out of the ascending triangle pattern and currently undergoing a retest is a technically positive development. This type of structure provides a strong bullish signal to investors. However, for this signal to be valid, the retest must result in support, otherwise the breakout may be considered invalid. Therefore, it is vital that investors evaluate both technical data and market news together. If the price finds strength at this level and initiates a new upward move, there is strong potential to reach the pattern's target levels. In this case, investors can enter the uptrend early and take advantage of potential profit opportunities. The upward trend structure observed in the RSI indicator is one of the key technical signals indicating that market participants' buying tendencies have continued steadily over a certain period. The formation of such a trend usually implies that the price is also moving with upward momentum and that buyers have control over the market. The clearly visible rising trend line in the current RSI chart has been tested several times before, and each time, the RSI responded with an upward bounce. This confirms that the trend line acts as strong support and is a significant zone from a technical analysis perspective. When the RSI approaches or touches this rising trend line again, as seen in past instances, there is a high likelihood of another bounce from this area. The RSI approaching this trend line may suggest that the market is nearing the oversold zone or is in a corrective phase. However, if a bounce occurs from this trend line, it could indicate the end of the correction and the beginning of a new upward wave. In such a scenario, an upward movement in RSI would likely be accompanied by a similar movement in the price chart. Since RSI reflects investor psychology from a technical standpoint, trend lines on this indicator provide insights not only into price movements, but also into shifts in market sentiment. Maintaining this rising trend in RSI signals that market strength remains on the side of buyers. RSI nearing this trend line again could be considered a buying opportunity for traders, as reactions from such trend lines often mark the beginning of strong momentum moves in technical analysis. The RSI is currently positioned just above this rising trend line and is showing a pullback toward it. This pullback should be viewed as normal, as occasional corrections are essential for the sustainability of a healthy uptrend. If the RSI experiences a pullback toward the trend line and then finds strength to move upward again, both momentum and price are likely to gain upward strength. This trend line has been tested several times in the past, and on each occasion, the RSI rebounded strongly from this zone, reaffirming the buying momentum. Therefore, these levels can also be considered potential re-entry zones for investors. A rebound in RSI from this area would signal a market recovery. With such a bounce, if RSI begins moving toward the 50, 60, or 70 levels again, the price movement may also gain positive momentum. This trend line is not just a support level in a technical sense, but also reflects market psychology. It is a zone where investors find confidence and align their decisions with technical signals. If the RSI turns upward without breaking this trend, it may foster positive sentiment among investors, allowing both short-term and long-term participants to approach the market with greater confidence. On the other hand, if the RSI breaks this trend line, caution is warranted. A close below this line could indicate weakening momentum and signal a shift in market dynamics. However, since no such breakdown is currently observed, the existing structure supports a strong positive scenario. RSI approaching this rising trend line again and bouncing from it would paint a technically reassuring picture. Additionally, if RSI touches this trend line again, the area technically becomes a support zone, and the reaction from this level could make future upward RSI breakouts even more meaningful. If RSI responds with strong upward movement from this point, it may also signal sharp and significant upward moves in the price. For this reason, the RSI's current position and its potential to approach the trend line again are developments that investors should monitor closely. In conclusion, the rising trend observed in the RSI indicator provides a highly valuable structure from a technical analysis standpoint. This trend line has inspired confidence in the past, triggered strong reactions, and has become a psychological support level among investors. If the RSI approaches this line again, the probability of a bounce appears quite strong. Such a bounce would indicate a potential return of upward momentum in the market and support continued price increases in alignment with this technical outlook. From this perspective, maintaining the RSI's rising trend structure suggests that the current market setup supports a healthy bullish scenario. When RSI rises, price typically rises as well.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.